Welcome to Agoracom Small Cap Breaking News, your daily go-to source for the best small cap headlines for over 65 million investors since 2007. Today, we're diving headfirst into the small cap world, bringing you a rapid-fire briefing on some of the most compelling breaking news stories. We've sifted through the noise to bring you the key developments from companies making significant moves across diverse sectors, focusing on the hard numbers and the strategic implications that truly matter.
Exactly. And our mission for this deep dive really is to quickly extract the most important nuggets of knowledge and insight from these breaking news releases. We're zeroing in on the actual results and the implications that are truly compelling for someone like you who's looking to go deeper. Think of this as your essential breaking news update, distilled for maximum impact and immediate understanding.
All right, let's get started. Kicking us off in the rapidly evolving world of blockchain, we have a headline from DMG Blockchain Solutions. The news reads, DMG Blockchain Solutions June results highlight resilience amid challenges and growth strategy. You can find them on the TSX Venture Exchange under the symbol DMGI. DMGI. Now, for those unfamiliar, DMG is known as an innovative blockchain and data center solution provider, right at the sort of forefront of the Bitcoin mining sector.
Yeah, and the standout point here, I think, is how they're navigating a very dynamic, often challenging environment. In June, DMG mined 23 Bitcoin. Now, that is a decline from the 31 BTC they pulled in May. Their hash rate also dipped to 1.56 exahashes per second, down from 1.89 EHs. Think of that as their raw computing power, right? So a dip means less mining capability. Now, they attributed this drop to an unscheduled 2-day electrical outage at their Christina Lake facility, plus some, ongoing hydro infrastructure challenges. But what really caught my attention is their strategic response to these setbacks.
Okay, so it sounds like, short-term hurdles maybe, but is there a deeper, more structural change happening at DMG? Something that makes these results noteworthy beyond just the immediate dip?
Well, that's a key distinction, yes. Despite those operational issues, DMG is strategically transitioning more of its mining capacity towards hydroelectric power. And this isn't just about sustainability buzzwords. It's about fundamentally de-risking their energy exposure. That's critical. In a sector where energy costs can swing wildly and just eat into margins, securing cheaper, stable hydropower gives DMG a distinct long-term competitive advantage, something few rivals possess. That translates directly into potentially higher, more predictable margins. They've also signed a binding agreement for a new data processing center. This one's in a Canadian province outside of British Columbia. That's expected to add approximately 1 EHs of Bitcoin mining capacity by the second half of 2026. And this move really aligns with their goal to source cheaper, renewable energy. Financially, they ended June with 341 BTC on hand and made some strategic sales to fund operations and, importantly, reduce their loan balance.
Right. So what does this all mean for someone tracking the Bitcoin mining space? How common are these kinds of operational setbacks, and how does DMG's strategic response stack up against its peers?
That's a really important question about their forward momentum. Look, operational issues like power outages, they aren't uncommon in this industry, not at all. But what differentiates DMG, I think, is their aggressive pivot. While June saw some operational hiccups, their focus on low-cost renewable energy and their expansion into new, more affordable energy regions are really significant. This strategy positions DMG to lower operating costs and significantly enhance sustainability, which is, frankly, key in such a competitive sector. They've set a pretty ambitious goal, reaching 3 exahashes per second by the end of 2025. Their CEO, Sheldon Bennett, put it clearly. He said, quote, "In June, we encountered several unforeseen issues, but we also advanced our longer-term objective to migrate our Bitcoin mining to where energy is less expensive," end quote. It just highlights a strategic pivot that could really solidify their competitive advantage going forward.
That emphasis on long-term strategy and cost-effective renewable energy for DMG, even with the immediate challenges, certainly makes them a compelling story. Something worth investigating further, looking into their plans. Okay, and speaking of companies innovating and adapting, let's pivot now to advanced materials. Our next breaking story. HPQ's latest pilot test delivers higher purity, higher quality fumed silica while validating semi-continuous reactor operation. That's HPQ Silicon Inc. trading on the TSX Venture Exchange, symbol HPQ. HPQ Silicon is an innovator in advanced materials and clean tech manufacturing, operating in the multi-billion-dollar fumed silica market. A big market.
Yeah, a very big market. And a key takeaway from this release is the sheer leap, the leap they've made in their fumed silica reactor, or FSR, pilot scale testing. Their 5th pilot test, test number 5, showed some really dramatic improvements, things that could fundamentally shift product applications. Get this. They managed to cut carbon-based impurities by a remarkable 85%, and other impurities were reduced by 50% to 86%. Huge drops. On top of that, the material surface area, which is a critical performance metric, increased by 57%.
Okay, so it sounds like they're not just making a better product, but they're proving out the process itself. Because those purity improvements are impressive, but some might say, well, semi-continuous operation is still a step away from full industrial scale. What are the big hurdles between here and true continuous production?
Right, that's a critical point, and they addressed it. This test also marked the first time they successfully collected material in the product recovery unit during semi-continuous operation. So this validates a key step towards industrial deployment. It means they're getting closer to real-world, large-scale production. Now, the transition to fully continuous, yes, that involves scaling up the reactor size, ensuring consistent long-term operation without interruption. Those are engineering challenges, absolutely. But they seem to be tackling them systematically. And to add even more credibility, these impressive results were independently confirmed by a leading global fumed silica manufacturer.
That's key.
That kind of third-party validation is, well, it's huge in this space.
Which leads us to the crucial question about the broader implications. How significant is this for the entire fumed silica industry and for HPQ specifically?
Well, zooming out, this signals a potential disruption. I mean, a real disruption of an industry that, for 80 years, has relied on pretty energy-intensive high-emission methods. HPQ's process is designed to be lower cost and lower emission. Their CEO, he highlighted the scale of the achievement. He said, quote, "We're talking about a 20-fold scale-up from lab to pilot scale and a shift from batch to semi-continuous production while still improving the product," end quote. And they're not stopping there either. Phase 2 aims to further boost that surface area. This isn't just an improvement, it's potentially a paradigm shift in how fumed silica is produced and how it's used.
A clean tech profile, lower capital expenditure in a market that seems ripe for innovation. It definitely highlights the long-term potential here. Warrants deeper research for sure. Okay, next up, we're moving into the world of gold exploration with Goldshore Resources, Inc. The headline: Goldshore Resources expands gold potential at Moss Gold Project with positive drilling results. Their stock symbols are GSHR on the TSX Venture Exchange and also GSHRF on the OTCQB. Goldshore Resources is all about their flagship Moss Gold project in Northwest Ontario, Canada.
And what really caught my eye here is the sheer strength of the results from their recently completed 20,000-meter drill program. Just solid results. In the QES zone, they've seen the mineralization thickening and finding these wide intercepts, which is exactly what you want to see for building a robust resource. For example, drill hole MQD 25155, it hit an impressive 42.7 meters of 1.09 grams per ton gold, starting at 241.6 meters down. And that included a fantastic 20.0 meters of 1.77 grams per ton gold and even 2.3 meters of 1.98 grams per ton gold. Another hole, MQD 25157, showed 31.9 meters of 0.95 grams per ton gold from 231.2 meters, including a solid 15.1 meters of 1.53 grams per ton gold. These aren't just, okay numbers. They fundamentally enhance the project's long-term economic model.
Okay, those are impressive intercepts at depth, absolutely. But for investors, near-surface gold often means faster payback, better economics up front. Did this program deliver on that front too?
Absolutely, yes. And that's another key highlight. They've identified extensions closer to the surface, which is critical for potentially faster payback in the early years of mining. You hit the nail on the head there. For instance, that same hole, MQD 25155, also yielded 9.45 meters of 0.73 grams per ton gold, much closer to surface, from 156.0 meters, including 5.0 meters of 1.03 grams per ton gold. And MQD 25157 had 11.7 meters of 1.48 grams per ton gold from just 102.0 meters, with a nice kicker of 9.75 meters of 1.71 grams per ton gold. This near-surface gold mineralization means they could potentially extract higher-grade material much sooner, which directly impacts the project's cash flow profile. Big deal for economics.
Right. So what's the so what for investors, especially concerning the project's economics and maybe the overall development timeline?
Well, this leads us straight to the broader implications. These findings don't just enhance the overall resource base, they significantly improve the project's economics. They really do. They're setting the stage for potentially a more efficient and cost-effective mine development down the line. Goldshore CEO Michael Henriksen confirmed this. He stated that, quote, "These successful winter drill results further support the potential for this region to support rapid payback in the early years of mining," end quote. And importantly, they're not slowing down. They've already announced an upcoming 50,000-meter drill program. That signals strong confidence in expanding this resource even further.
Hmm. And with direct access to infrastructure, plus that substantial existing resource base, what was it, 1.54 million ounces indicated and 5.2 million inferred, these results really reinforce the strategic position of Moss Gold. Lots of potential there. Okay, shifting gears now, let's move into biotechnology. We have exciting news from Clearmind Medicine Inc. The headline, Clearmind Medicine receives IRB approval for groundbreaking clinical trial to treat alcohol use disorder. You can find them on the NASDAQ exchange under the symbol CMND. Clearmind Medicine is a clinical stage biotech company, and they're focused on developing novel psychedelic-derived therapeutics. Interesting space.
Very interesting. And the standout point here is the major milestone they've just hit. Institutional Review Board, that's IRB approval from Tel Aviv Sourasky Medical Center for its Phase 12A clinical trial. This trial is evaluating CMND 100. That's an MEAI-based oral drug candidate aimed at treating alcohol use disorder, or AUD. Now, what's truly compelling is that it's not just an approval on paper. They recently announced that the first participant has already been dosed in this trial. Things are moving. The trial itself is multinational and multi-center, which adds to its robustness, more data points. It's evaluating safety, tolerability, pharmacokinetics, and crucially, the preliminary efficacy of CMND 100 in reducing alcohol cravings and consumption. And look at the collaborators. They're working with some really prestigious institutions, including Yale School of Medicine, Johns Hopkins University School of Medicine, and Hadassah University Medical Center in Jerusalem, top-tier partners.
Okay, let's unpack this. This is a potentially groundbreaking area, absolutely. But the psychedelic-derived therapeutic space, it faces unique regulatory hurdles, market adoption challenges. What are some of the hurdles Clearmind might face even if the trial results are positive?
That's a really important question. Look, this represents truly transformative potential for a condition that is massively underserved. Alcohol use disorder is a huge global health issue. The WHO says it's responsible for something like 4.7% of all deaths worldwide, so the need is immense. But the path forward isn't without challenges, you're right. Beyond just clinical success, Clearmind would need to navigate really complex regulatory frameworks for psychedelic-derived drugs. There's public perception, market acceptance, and a traditional pharma landscape. However, what might set CMND 100 apart is its novel mechanism. Many AUD treatments focus on aversion or just managing symptoms. CMND 100's MEAI-based approach, derived from psychedelics, is designed to reduce the desire for alcohol, sort of at a fundamental neurological level. That novel mechanism could potentially offer higher patient compliance, maybe more durable remission compared to existing therapies where adherence can be a real struggle long-term. Clearmind CEO Dr. Adizul Ashani put it very succinctly, quote, "This milestone brings us closer to potentially offering a transformative treatment for individuals struggling with AUD, a condition that devastates millions of lives," end quote.
Being a pioneer in this space, psychedelic-based treatments for a condition with such a massive unmet need, global impact, it clearly gives Clearmind strong market potential. Definitely makes it a compelling area for deeper research. Okay, finally, we're circling back to gold exploration with McFarlane Lake Mining. The headline here, McFarlane Lake Mining discovers high-grade gold at McMillan Mine property, unveiling new exploration potential. They trade on the CSE exchange under the symbol MLM. McFarlane Lake Mining is a Canadian gold exploration company.
Right, and what's truly compelling here are the very promising new results from their McMillan mine property in Ontario. Really eye-catching stuff. In drill hole MLMM 2511, they hit a wide zone 29.5 meters at 1.31 grams per ton gold. Pretty good width. But within that, they found a high-grade core, 6.6 grams per ton gold over 4.5 meters. That's getting exciting. And it included an even richer intercept of 20.1 grams per ton gold over 1.45 meters. Bonanza grade, basically. And all of this is 200 meters below the surface. So this is serious high-grade gold at a depth that indicates some strong continuity.
Okay, high grade is always good news. And I understand there's also a new geophysical discovery that could point to even more. This sounds incredibly promising. But, in a competitive gold market, how does a discovery like this really differentiate McFarlane and its McMillan project from other gold plays out there?
Yeah, that's a crucial point of differentiation. During a recent geophysical survey, basically looking underground with electrical methods, they discovered what the team is calling a superconductor. Now, in this geological context, that refers to a highly electrically conductive anomaly deep underground. And importantly, at the McMillan site, this type of feature has historically proven to be a strong indicator of high-grade gold mineralization. So this is a prime target. It could lead them directly to additional high-grade zones, essentially guiding their future drilling much more effectively. Plus, they've established strong continuity of gold mineralization along a 500-meter plunge length in the McMillan gold structure. That shows consistent, high-value results over a significant distance, which really de-risks future exploration.
Okay, so what's the bigger picture then for McFarlane Lake Mining and its assets with these new findings?
Well, looking at the broader implications, these high-grade gold intercepts at depth, they add significant value to the project right now.
Hmm.
And they demonstrate substantial exploration potential still looking beneath the surface. That superconductor discovery is particularly exciting because it points towards potentially even more high-grade zones they can target, enhancing the project's overall resource potential significantly. Their CEO, Mark Trevisiol, confirmed this. He stated, quote, "Our team has demonstrated that we have good continuity of gold mineralization stretching over 500 meters. There is good potential to find a lot more gold mineralization along this strike and at depth," end quote. That suggests, a potentially long and productive life for this asset.
Definitely. With strong gold prices holding up and the project's location in such a prospective region, this really reinforces the potential for substantial returns from McFarlane Lake Mining. Certainly warrants a closer examination. And that wraps up our deep dive into today's breaking news in the small cap market. Quite a range today. From DMG Blockchain's strategic pivot in Bitcoin mining, to HPQ Silicon's disruptive advancements in fumed silica, Goldsure Resources expanding their gold potential, Clearmind Medicine's groundbreaking clinical trial for alcohol use disorder, and McFarlane Lake Mining's high-grade gold discoveries, it's clear the small-cap market is as dynamic and innovative as